Hey everyone, welcome back to the channel. This is your weekly review for August 3rd through 7th. Quick reminder before we start, this is educational. It's how I read the market with the Conflux method, not a signal service and not financial advice. Trading futures and options carries real risk, so take this as a walkthrough of my thinking. Let's get into it. First, a look back at last week, then the week ahead. Let's start as usual with last week. It began with an excellent follow-through on the euro, exactly as we talked about in the previous weekly review. And on the same day, we got a two-way move on gold, from one zone to the other. Silver spent the whole week fighting inside the range I pointed out, and never managed to develop a normal move. I didn't trade it because I was waiting for it lower. On the yen, just as I said last week, the interventions came and the US Treasury got involved on top of it. So it worked out really well. We didn't reach the zones above, but the main intervention target was worked perfectly. On the dollar index, we're still holding well on the zone, but more on that in a moment. Let's start with the euro. The 10% zones line up both from the contract and on the weekly, and that's also where the oldest debt on the euro from April 30th still sits. As I said last week, into the expiration we go up, but an adequate entry down at the lows for that ride wasn't given. I was waiting for a 1.1185 or 1.1285 for the reversal. The 25% zones, both the upper and the lower, are interesting for trading, especially the lower one. On December, 6,000 calls went through at the 1.20 strike. On spot, that's the 1.1961 region. And there's a debt there too, but that's already a reversal of the euro into further growth, all the way up to 1.23 on spot. Now, to the dollar index, 98.35 is the last support before 94, and 100.85 is the last resistance before 103.85. What the index chooses will be clear after the NFP. If it comes out weak, they'll take 94 by the new year. From the dollar, let's move to the yen. As already said, the Treasury and the Bank of Japan stepped in. Now the main question is whether they'll repeat 2024 or not. If they do, then you should only catch it at 144.50 and 150.75. There's also a chance it gets stuck at 147.50, but they're without limits. Now to the metals, starting with gold. Unlike the currencies, gold hasn't given in to the risk on yet, and that's fairly strange, given that price has been in compression for a month, and on the H4, the technicals are drawing a pennant, or whatever you want to call it, so the spring should straighten out. The weekly zone looks great for buys off it. The month zone sits clearly at 3,551 to 3,565. Everything I said last week is still relevant. If there's enough strength to spill down to 3,550, then from there, you can long toward at 4,530 through the end of the year. From gold to silver. Overall, it's the same logic as on gold. The percentage zones landed well on the levels, so let's see what they give us to work with. Let's move to oil. Here, some interesting strikes went in on the options. For now, that's how it looks. There are, of course, options at 130, 138, and 147, but that's too far. Only worth it if you leave part at break even and don't close. But Trump backs off on a strong rise, and it's the same now. And finally, they pound. I'm still thinking about whether to trade it from the long side and whether the reversal has already passed. Overall, I think something like that could form in the move, and a shot up on the NFP if the data comes in weak. The balances that are in the market and haven't really been broken over the last year, it's quite realistic that we stay within them. That's the plan for the week. Remember, these are zones and scenarios I'm watching. The market decides, not me. So let price come to your levels and let the confirmations line up before you act. If this breakdown was useful, subscribe and turn on notifications so you don't miss the next weekly review. and drop a comment with the instrument you want me to cover. And one more time, so we're clear. None of this is financial advice. I don't sell signals and I don't promise profits. This is educational content about the Conflux method, and everything here is my own view of the market. Trading futures and options involves a substantial risk of loss, so never risk money you can't afford to lose, and always do your own analysis. Take care, manage your risk, and I'll see you in the next one.